Hello, everyone. My name is Chris Ahn, and I'm a partner at Haun Ventures, a crypto-focused venture firm. I'm excited to be here today with Zac Townsend, who is the co-founder and CEO of Meanwhile. We're fortunate to be backers of Meanwhile and excited to have this discussion with him. And Zac, I'd like to kick us off right away here with what is Meanwhile?
Meanwhile is a life insurance company built for the crypto economy. We are a long-term insurer that is focused on helping people do tax and estate planning and just protect their families entirely in Bitcoin. So we are a regulated and licensed full stack life insurance carrier entirely in Bitcoin. So people pay us premiums in Bitcoin, we pay claims in Bitcoin. We do our audited financials, our solvency calculations, our regulatory filings entirely in Bitcoin. And then we work with people all over the world who want to save for the long term, want to protect their families, want to build a legacy entirely in Bitcoin.
Awesome. So there are lots of places where somebody can go to get a life insurance policy. So what's unique about paying out in Bitcoin rather than in dollars, and why is that important?
Yeah. Uh, well, I think you're a big believer, Chris. I'm a big believer in the long-term value of Bitcoin. I think day to day, week to week, certainly the last month, we might see the price of Bitcoin go up and down. But the thing about life insurance is about thinking for the really long term. It's about thinking in decades, 10, 20, 30, 40, 50 years out. And that's where we think Bitcoin really shines. We believe, and many of our customers believe, that it is one of the great stores of value in the world. And in particular, even if you don't believe that Bitcoin is going to take over the world, because not everyone believes that, we do find that everyone seems to have concerns about the debasement of the dollar, the debasement of fiat. So we see it as a critical hedge. So unlike a dollar policy, I'll use myself as an example. I have an 8-year-old son. I bought $1 million of life insurance coverage when he was born in 2018. When now I've seen the purchasing power of that $1 million go down 25, 30% since that time because of inflation. So if you have any concerns about inflation risk, currency risk, political risk, jurisdictional risk, we believe that a Bitcoin life insurance policy, and in particular our first product, which is a Bitcoin whole life policy, so it lasts your whole life, is a critical component of that sort of planning, protection, and wealth preservation.
I think that will resonate with a lot of people, especially since inflation has been top of mind for a lot of folks over the last couple of years. So conversely, though, why not just buy Bitcoin outright? So why would you want to hold it inside of a policy if that's the case?
Yeah. I'd say we see two big sets of reasons. The first is there is a pitch for whole life insurance that's the exact same pitch that like Northwestern Mutual would give you or New York Life would give you. So that is one, it goes to your kids, your beneficiaries, income tax free. The second is that it's compounding tax free. So our policy, the primary way it works for US people is you pay a premium over 10 years. So that might be like 1 Bitcoin a year for 10 years. And then we promise you a fixed guaranteed payout of, I'll call it 15, but it depends on your age and how healthy you are and all that stuff. So we are churning 10 into 15, and we can talk about how we do that. But if you were doing that yourself, which is really hard because there's a lot of like institutional credit and stuff. But even if you were doing that yourself, you would owe interest income interest income tax every year. But because it's happening inside a life insurance policy, it's compounding tax free. And thus you like get further than you would even if you were investing your own Bitcoin, doing your own credit. The third thing is, and again, these are just benefits that are just true of whole life. It's just that we follow all the rules for our policy to count as whole life in the US. The third thing is that you can take a policy loan against the policy. And that means you can borrow from us against the policy as collateral. And what's amazing about that is it's all in Bitcoin. So there's no margin lending. Like you might put in 10, you might borrow out to Bitcoin. So the price of Bitcoin goes up and down. That doesn't matter. Again, no capital calls, no margin blowouts. And we don't actually expect that you'll pay back that loan. We expect that you'll just eventually die, and then we'll net out that loan against the death benefit. So what's cool about that is if you think that Bitcoin is an appreciating asset, again, 10, 20, 30, 40 years in the future, then what you can sort of feel about that is that this is actually a place to put some of your Bitcoin or all of your Bitcoin to be able to borrow against it on a tax-free basis. So those are like the normal pitches for whole life insurance that Northwestern Mutual would make, and we would just say those are in Bitcoin. I think the other thing that we see with a lot of people is there are just some really sad stories about people die and their like loved ones don't know how to get their Bitcoin, or their wallet doesn't work anymore. Like these really tragic stories. So we find a lot of people, there's also a peace of mind. Like we are under a legal regulatory obligation to make sure that your beneficiaries get that value, that Bitcoin, when you die. And that just is something we have to do. And if you want to trust a regulated licensed entity to help you with that, that's a very Bitcoin specific reason that we have policyholders buy our policy.
Let's dive into that a little bit more, Zach. So, what does Meanwhile actually do with the Bitcoin? Where is it held? How secure is it? And how do you end up generating the yield on the back end? Because as a life insurer, that's a core part of your business.
Yeah. So for custody, we use Anchorage. We have a really, complex, sometimes very frustrating to us, treasury management security model. So it's very hard to move the Bitcoin around, but it is very safe. I like to point out, just for self-preservation purposes, I don't want any fingers chopped off, that like I can't move Bitcoin by myself. It takes a whole set of people, and they all have to use biometric stuff, and they're distributed, and we're like never in one place, and all this stuff. So we think that, at least for our U.S. customers, Anchorage is the absolute best from both a security standpoint and from the regulatory positioning as an OCC regulated national trust company. We have some international customers that sort of never want their Bitcoin to come to the U.S. And in that case, we primarily use Zodia, which is Standard Charter's custodial subsidiary, which similarly has a lot of security procedures and multi-sig and things like that. So from a custody perspective, we feel like this is best in class, and it's quite institutional. And again, I can't move Bitcoin without like 10 other people. So, don't come after me. The second thing you asked is like, well, how do we get yield? And I think the important thing to understand here is that as a life insurer, we have something that very few people in crypto have, which is like we have duration. And we are often doing, that means that we can do things that like take last a year, 2 years longer, and that means that we can sort of engage in credit opportunities that a lot of other people can't, because we can like sort of look through cycle, and that really breaks down to two different ways we get yield. The primary way we get yield is we engage in a lot of what I call like tax optimization trades. Is also a thing that is just great to do with a life insurer. So that people will post Bitcoin to us as collateral, and then we'll lend them Bitcoin. We'll do repurchase agreements around that. We'll sort of do a wide range of like tax structuring. But the fundamental reality of that is we have full Bitcoin collateral against those loans. So there's no credit risk, because if the counterparty were to fail or not pay, we are always like still have their Bitcoin, or some other assets. We don't do any lending across either bucket against anything other than Bitcoin or dollars. So there's no altcoins or whatever pejorative you might want to say about that. So the primary vector is these tax trades, Bitcoin for Bitcoin, lending, repurchase agreements, other things like that. And if you have a bunch of low tax basis Bitcoin, you should talk to us about that too. The other thing that we do is we occasionally will lend to like really large institutional counterparties, and we'll trade the duration that we have. Like we'll lend to them for 2 years, but in exchange, we want 100-page legal agreement and covenants and seniority and a parental guarantee. And we do very few of these trades. Fundamentally, we are all about credit preservation. We've been getting yield on Bitcoin for almost 4 years now. We've never had a credit loss, and that includes like Celsius blowing up and Voyager and BlockFi and Genesis. So we're very, very careful, and we lend a small amount of Bitcoin relative to people's equity. And I think that if you were in the crypto space, you may be surprised at some of the entities we won't lend to that can be quite reputable, but they only have $500 million in equity or something. Like we're just not willing to lend even 100 Bitcoin to those folks.
I think that last point is really important to emphasize here, which is that for Meanwhile, as a life insurer, the goals of this enterprise and organization is explicitly to be stable and to be able to service its policy obligations for a very long time. And that is not always the case with other companies in crypto that might be more focused on trading and shorter term activities. And so this aspect of duration and stability is really important to the company.
Yeah, I mean, I guess I'll put that in a few different ways. The first is just that we are profoundly uninterested in like almost everything that everyone else is interested in crypto, right? So anything that's about like the now, like we don't really do trading, we don't do payments, we don't do wallets. Like we are all about like the long term, the stable, duration. That's just where we want to play, and we think that's like a critical part of financial services, but also actually the critical promise of Bitcoin. We think Bitcoin is not an asset that really should be thought of as like, this could be controversial, as like a day-to-day payments mechanism. Maybe Lightning will change that, but we see it more as a long-term, durable store of value, and thus we are building and have built a company that is about long-term, like durable persistency and trust. The second thing I'll say about that is just, selfishly, I think this is a great idea. I'm working really hard on it. And the only way that this is not going to work, because in some ways the benefit to users and policyholders is quite clear, the tax benefits, the sense of security, the long-term nature, is if we screw up the credit side. So we, like every single day, like every single meeting, like we make sure that we're making the right choices, not just candidly for our users, and it is the right thing to do, but like also for ourselves. Like we see that credit has a mixed history in Bitcoin land, and we are making promises that you said are going to last a long time. On a statistical basis, we have definitively made promises they're going to last longer than I will live, that will like outlive us and probably everyone in the company. And we take that trust on behalf of our policyholders incredibly seriously. And honestly, every single day we ask ourselves, like, how do we make the right choice? How do we be trustworthy? How do we like live up to the honor that we have, that people have given us their Bitcoin?
So for somebody who's listening that wants a policy, what's the practical path to getting coverage with Meanwhile? What should they expect? What should they prepare? And maybe just as a last part to that question, Obviously, today you mentioned that Meanwhile offers whole life Bitcoin policies, but what would you say to those that are interested but a little bit nervous about having all of the policy be in Bitcoin?
Yeah. Well, on the first question, we operate like a tech first, digital first life insurer. You come to our website, which is at meanwhile.bm. You can start going through the flow. Most people, there's a lot of questions, like we're a life insurer, like, have you ever had cancer? Like, all sorts of questions to underwrite you. We get a lot of medical data from various databases. And usually we find that every single person wants to chat live about what we're up to, what we're doing, like how the policy works for them. And particularly as policy sizes get bigger, so we have people who buy policies in the tens, sometimes hundreds of Bitcoin. That person often has a trust. They have an advisor. They have a complex tax setup. They want to do like half the policy in this revocable trust and half the policy in this irrevocable trust. So we find that people just want to talk to a human being, and like that's the delivery model. So you come to our website, you sign up, you can begin answering questions, then you'll get an email from me or one of my colleagues to jump on the phone and answer questions. And that's not because I think the flow is beautiful and like it's easy to go through. It's just like this is a big purchase, and we know that people are making a big decision. On the second question, we. I don't know if you should have all your. I guess there's two different components here. One is, we have a policy limit. We can only take so much Bitcoin from any one person, and that's because if you get hit by a bus, we don't want any one life to like really materially impact the business. So the way we smooth that out is we have a policy limit. So I think for a lot of our users, we see that this is a component of their like overall Bitcoin strategy. So they might have some in a multi-sig at Casa or Unchained or whatever. They might have some on a hardware wallet, buried in their backyard, and then they have a Meanwhile life insurance policy. There are other users who do give us all the Bitcoin they have, and then there are even some folks who use it as a dollar cost averaging. But I would say it's usually a like component in this mix. So both, it is not the only way that we recommend people hold Bitcoin, and then conversely, particularly if you like have a mortgage or other dollar-based liabilities, we don't necessarily recommend this is the only insurance you have. We just think it's like the most important piece of long-term insurance that you have for like long-term, intergenerational wealth protection and transfer. I myself, I have a 30-year mortgage on my house, so I also have a 30-year term life policy, so that if I get hit by a bus, my wife can pay off the mortgage. But then for me, I have all my Bitcoin in a Meanwhile life insurance policy. I was the first policyholder.
I see a question from the audience here. So one of the questions is somebody who is interested in potentially switching, but is a little bit nervous about Bitcoin. And specifically, one of the questions is, how do you think about, the Bitcoin market and what Bitcoin will do in 2026 and how that affects this life insurance strategy? So I thought this was an interesting question because, in the conversations that you and I have, Zach, we're not oftentimes thinking about 1 year price movements in Bitcoin. And I think it's important to emphasize that.
Yeah, I think that's absolutely right. It's funny. There was a big, I think there was actually a pretty big crash yesterday, but there was a pretty big crash like 2 or 3 weeks ago on a Friday. And I think you, Chris, who, you're on my board, and some other people texted me at the end of the day, and we're sort of like, oh, like how'd the day go? And I think I didn't even realize there was a crash happening. Like it just has like zero effect on our business, and it because we do everything in Bitcoin, right? So we just like completely matched. All the promises we make people, all the assets we hold are entirely in Bitcoin. So the price movements of Bitcoin don't matter to us. We understand it, like obviously it matters emotionally to our customers. But honestly, if you're not convinced about Bitcoin in any way, you probably shouldn't buy a policy. I think what we see is just increasingly that you have BlackRock, Fidelity, Franklin Templeton, Morgan Stanley, all saying like have 1% to 5% of your retirement savings or 1% to 5% of your wealth in Bitcoin as this like critical hedge, or again for political risk or jurisdictional risk, or currency risk, or inflation risk, and that sort of comes down to the direction you're coming from. So we have some folks who are very crypto native, and it's just like obvious that they're going to buy a Bitcoin life insurance policy because they're growing up, they're getting married, they're having kids, and like they're bought in. And then we have another component, sort of increasingly large, that is just like traditional family offices, traditional people with a wealth advisor. And they are making the decision, maybe they start by buying the ETF, but then they're making the decision, okay, maybe I want to own some Bitcoin. I want to get like closer to having a certain amount of my wealth in Bitcoin. And then we find that like this pitch of, this is got all these tax benefits, like we manage the transfer for your family when you die. It can like go into your irrevocable trust if you have one, like that really resonates, right? So often, if you're a high net worth individual, you already know about life insurance as a planning tool, and then saying like this is the right planning tool for your Bitcoin can really make sense. But in either world, in either sort of persona of policyholder, we try to emphasize that like the day-to-day price movements don't matter. Now, it may be easier to it's interesting. We have some folks who feel a lot richer when Bitcoin is up because they have a lot of Bitcoin and they buy a policy. And then we have other users who like want to like get a deal. So they buy Bitcoin when it's low and then they like pre-fund the policy. So our business, like it turns out, isn't particularly cyclical to the price movements. But I think for each individual, the decision to buy a policy might change depending on the price.
So we talked a lot about, meanwhile, we talked a lot about how it works under the hood, why somebody might want to buy this. But if we zoom out and we look a little bit broader, what does a mature Bitcoin financial system look like in 5 to 10 years? And what role does Meanwhile actually play in getting us there?
Yeah. Look, I think fundamentally we think that, as I said, Bitcoin is going to be one of the great stores of value in the world. And I think what that means is just as we are using it as a currency, right? That's how our balance sheet works. Like it's not Bitcoin as an asset, but Bitcoin as a currency. So our insurance company could be in dollars or euros or yen or Swiss francs, and like we've chosen to build it out entirely in Bitcoin. And I think that more and more of the world will begin to think of Bitcoin less as an asset to invest in somewhat randomly, but more as like a gateway to an economy. And that economy will have like many facets, and I think it'll have dollars and Bitcoin. But fundamentally, I think they'll be borrowing and lending in Bitcoin. And we see our vision is that there'll be a yield curve in Bitcoin. So just like you could talk about like what's the 5-year borrow rate for dollars, we could talk about in some meaningful way what's the 5-year borrow for a double B credit in Bitcoin. And we see, meanwhile, both as a beneficiary of those debt capital markets in that like we want to buy assets that have longer duration, but also a sort of like progenitor and creator of those markets, again, because we are able to sort of say out to the world, like, hey, we're interested in lending to creditworthy counterparties, creditworthy sovereigns who can make long-term commitments in Bitcoin. And as we're demanding those assets, we're like working to create them.
So I'll ask you one last question, Zac, that I have prepared. And then I see a couple of questions from the audience in the chat. So I'll flip over to that. So where can people go to find out more about Meanwhile?
Yeah, again, we're at Meanwhile BM. I guess I didn't say this, but we're registered and licensed in Bermuda. Bermuda is not the Bahamas, is not Barbados, it's not the British Virgin Islands. It is a small island in the middle of the Atlantic where you walk around and it's like Munich Re and Swiss Re and Chubb. It's like the insurance and reinsurance capital of the world. But that's the .bm, regulated by the Bermuda Monetary Authority. So if you go to meanwhile.bm, then you can sign up there, and you can email us at hello@meanwhile.bm too.
Awesome. So I see one question from the audience, and this is about yield. So the question is, Meanwhile is a centralized company, and how does it work better than potentially borrowing against Bitcoin using a DeFi protocol, which might be quicker, potentially cheaper, and use maybe on-chain as a way to support the yield generation?
Yeah. Well, so the primary use case you're describing, which I think is like a great use case, which is you have some Bitcoin, you want to borrow dollars against it, and then you're using those dollars to go do something else. The problem there is always that like 50 or 80% price swings of Bitcoin are not like wholly uncommon, as we're experiencing right now. And borrowing against one currency in a different currency like always has that risk of being blown out or having margin calls or whatever. So I think the benefit of the policy loan, which I think is the most directly analogous there, is that you are actually borrowing in Bitcoin. And again, it can sound scary to have a liability or a loan denominated in Bitcoin, but the way that ends up working in this instance where you might need liquidity or want to buy something else is that you're borrowing it tax-free and then you eventually die. I think more generally, yes, we're a centralized company. We spent a lot of time trying to think about ways to have the company be decentralized. But the challenge is like, one, the primary benefit of these policies for a lot of people is the tax benefits. And we couldn't figure out a way to comply with the particular like Internal Revenue Code rules that sort of govern what does and does not get these tax benefits. The other reason is we actually did a bunch of user research early on about doing like on-chain underwriting, and the idea of folks committing on-chain so much personal information, even without their name on it, really scared folks because like there's a real correlation between Bitcoiners and like high privacy concerns. So it was tough to imagine that like just sort of running the company on chain, having to commit your medical records and like your history of cancer and your drug use and like these things that we need to reason about how good a risk you are. Maybe Haun Ventures and others will really work out the zero knowledge proof stuff so that we can do that. It's something that we like do track and pay attention to, but fundamentally, we're committed to the on-chain world in the sense that like we believe in Bitcoin and we believe in portions of DeFi, and we built a centralized institution because we wanted to offer these benefits to our users.
Awesome. Zac, I think we're out of time, but this has been an awesome conversation and really appreciate you taking the time and explaining to everybody what Meanwhile is all about and how it works.
Amazing. Thanks so much, Chris. And like, thanks to the whole team for putting this together.